Today we have someone from our congressional area. He's been a very highly regarded professional and business leader in Florida. He has worked as a public accountant for 30 years. He has his own firm, and his firm is a sub-S, so he knows a lot about sub-S's. He's president of the CPA firm Byron Shinn Company, located in Bradenton, Florida. He's been the past chairman and board member of the Florida State Board of Accountancy, and also the past chairman of the Manatee Chamber of Commerce in our area, which is a good-sized county. I welcome your testimony today. It's great to see you.
Thank you. Good morning, Madam Chairman, Ranking Member Buchanan, and members of the committee. My name is Byron Shinn. I'm a CPA in Florida. I graduated from the University of South Florida in 1979, and I've worked in public accounting since my graduation. I'm currently a shareholder of a small business S Corp, as Congressman Buchanan mentioned. I currently serve on the probable cause panel of the State Board of Accountancy, where we review complaints against licensees. I'm also on the advisory board of the University of South Florida School of Accounting, and I've previously served on the National Ethics Committee for the National State Boards of Accountancy. I wanted to talk to you as someone who's on the ground in the trenches dealing with small business. As a CPA that's face-to-face with those owners, over these last 30 years, as we deal with what entity to be, once they've elected sub-S, we have a distancing, if you will, between a C Corp and an S. And then you have partnerships. And several years ago, Wyoming started the LLCs. LLCs then were supported by the IRS in the late 80s to be acted on and treated like a partnership. So for those older entities that are still S Corps that would like to go to an LLC, we have a tax trap. We have cured tax traps in most places to help the business person run their business. We have a situation where you can move from a C to an S by an election. You have a built-in gain tax that prevents abuses. We have opportunities for owners to move from a sole proprietorship to a partnership, and there's the disguised sale rules that have a 7-year period. So the opportunity to move built-in gains to a 7 years is a convergence of similarities, similar to what we've done with fringe benefits. I like to point out that maybe as we sit here and tinker with a lot of tax law that becomes harder and harder, maybe we ought to just keep it simple. Why don't we provide an opportunity for them to make an election to move from an S, which they did back in the 70s or 80s or 60s, it goes back to 1958, and allow a bridge for them to move to an LLC and operate as a partnership? Why wouldn't they want to do that? It's better raising of equity. You can have disproportionate distributions, or you can have a broader source of ownership. You can have partnerships. You can have IRAs. You can have other sub-S's as owners of an LLC, but a partnership can't own a sub-S. So there lies the trap. Now, how do you avoid the abuses? Put in something similar to a built-in gain, the disguised sale rules. Just basically say, move the assets from a sub-S to an LLC. And if you do it, and you do it in whole, as long as it stays in that sphere of business assets in that entity, if you want to take it out, you want to distribute it out, you want to reshape the business, yeah, you ought to tax the heck out of them, just like you would in a normal situation. But if you're keeping the business in a whole, trying to make a go of it and raise capital, the other thing that's a real problem with S Corps is the opportunity. Every small business goes through its ups and its downs. You heard from the bigger S's, the banks. Well, they're having losses right now. The limitation on shareholders taking losses is limited to their basis in their stock. I know that's a tax terminology, but in a partnership or an LLC world, you can share in the debt generally as part of their basis to take losses. In a sub-S, the shareholders guaranteeing those debts, those guarantees don't count as basis. That corporate debt doesn't count as basis. Why is that? Doesn't make sense. And when I explain this to the owners of those companies that are S Corps, they scratch their head and they say, it doesn't make sense. Again, raising equity is very, very important. Whether we like it or not, there are pockets of prosperity right now, but we are in a recession. I'm from Florida. It's real severe. In places, it's worse than others. I'm on the west coast of Florida. We're very real estate oriented, and unfortunately, it's taken its toll. As people look to try to get equities into their businesses, if you're an S Corp, it's really, really difficult because those investors want a preferred rate of return. They might want convertible debt. Those two items are not allowed in an S. Those would trigger a termination. One thing that was mentioned earlier was the abusiveness of payroll taxes in an S corp. And as I've seen taxpayers come to me asking for my help, I've seen situations that are abusive. And I don't want to beat up on the small business. It's so hard to make a buck and do your part, make your payroll, pay the rent. A lot of my S corps aren't the really large businesses that you referred to. Mine are, I'm in the ditches with the smaller businesses. I don't have any public companies as clients. I don't want them. I want to have the Big Four and the BDO Siemens do those. But they're doing smaller businesses too. Another thing that I want you to think about is the passive loss rules. Right now, in an S corp, you maintain their identity. If you own your business and you have a building you're in, and you're renting out part of that building to a third party, the operating profits or losses are maintained separately. Those losses are currently limited. As real estate takes its hit and our banks go through their struggles, it's real important, I think, to allow for at least some tax savings to these small businesses because of the losses that are incurred, ought to be getting current tax benefits. It might take some of the pressure off of the foreclosures we're seeing. And lastly, I listed in some of my written testimony some items of accounting method changes, some of which are currently in bills and had been discussed. The bonus depreciation, I fully support. The increase in the 179 expense, absolutely. And please just don't do it for 1 year. Make it stick. Let it last for a while. The small business person keeping up, they have to pay for the accountants, and it's part of their, how many times have I been told I'm just administrative overhead? Also, the write-off of bad debts. Banks are allowed to do reserves. Small businesses, we have to only write off the receivables when they go bad. But there's a history of percentages. We ought to think about it. And lastly, the restaurateurs, the ones that get hit really tough, the FICA tip credit. We have a wonderful area for opportunity, but it's so narrow. If the restaurant's losing money, they don't get any benefit from it. If they're making too much, they can't get to it. The window to use the FICA tax credit is so small that it's almost useless. It's really sad. So lastly, I wanted to mention finances, since you are finance and tax, and I can get going on taxes. But as far as finances, the banking industry, because of the easy credit that was through the last few years and how we've got ourselves into this situation, the regulators have now come back and been very, very tough. And on these small businesses, remember, most of these small businesses had to personally guarantee these loans. They also probably had to put up their houses as collateral. Well, as these houses, excuse me.
You're starting to run out of time.
Sorry. So this equity is now gone, and they're really in a bad situation from a banking perspective. So thank you for this time.